your weekly fix on finance and investing. This is the Corlin Economics Report.
Welcome back. Continuing to listen to the weekend edition of the KE Report. Now we are shifting our focus a little bit more specifically to the precious metals, as I am chatting with Jordan Royburn, founder and editor of The Daily Gold. Now, Jordan, you and I talk every week, usually on Wednesday, and we are recording this on Wednesday, as I am with the whole show. I do want to take a look at the precious metals. We have gold that has or is having another pretty strong week as we're recording this, trading right around 1540. And as much as everybody is looking at that 1550 level as resistance, there's a lot of people considering where that next bounce could be if we don't get a correction that I know a lot of people are saying we are overdue for. Then what is that next level you think gold could move to?
Well, Corey, the measured upside target from the major breakout comes to about 1,700. But looking at the price action now, I'm just looking at a weekly chart, and it's starting to look extended on the weekly. I mean, it did hit 1,550 2 weeks ago, but it closed. It still closed up for that week, but it closed well below the high. It was up again last week. This week it's up again, although right now it's pulled back from the high, which I think is 1,565, according to this chart. Looking at the weekly chart, it definitely looks extended. I mean, the COT, I put a video out on that and just a big picture look at the COT, and not to be too bearish because of the COT. But that being said, we are at an extreme right now in terms of sentiment, and we are extended, and there is strong resistance at 1550 to 1575. I mean, the stocks are still seeing a decent bid. It's just going to be very interesting to see if this move will have legs or if we get a correction first. I mean, I'd love to see a correction here just because if we get a correction, that could set up another wave higher, especially if we get a correction and it lasts for a couple weeks or maybe even more than a month. I mean, that would be really healthy to correct this overbought condition and then perhaps set up, another really strong move. I mean, I'd love to see a quick pullback to like 1420, 1425. I think that's the real strong support level to keep an eye on if this move starts going the other way. And typically in very strong trends, when you need a significant pullback, it can happen really quickly. So I wouldn't be surprised if that's the route that gold is going to take, if it's going to go lower first before going higher, where it corrects, but it does so very quickly.
That's interesting that we do get a quick correction, because when you take into account, just looking at a weekly chart, how strong this gold move has been, gold's been up 12 out of 15 weeks, which is a very strong and almost straight up type of move. But Jordan, let's look on the other side too. You know what? We keep on hitting these resistance levels. Gold keeps on consolidating for a few weeks and then pushing even higher. If gold does push to that 1,700 level, does that change that lower target that you think we could get to around 1425?
It's a really good question. I mean, I'm just guessing at this point, but it's possible if gold gets up to 1,700. I mean, looking at the weekly chart, I'd say it would correct to at least 1,500. Maybe it'd go a little bit below. So it's really hard to say because it depends on fundamental developments. I mean, that's people who look at charts like me. One issue that I have with a lot of the work they do is like it's 100% charts, and charts don't tell you. I mean, they can give you a hint at what the fundamentals are, but they don't. Yeah, I mean, you have to consider fundamentals also when you're looking at charts, because otherwise, I mean, people who are just looking at charts. I mean, there's people who are saying gold's going to go to like 2,000 really soon, and then there's people who are saying it's going to go to 800, and they all have the same chart that they're looking at. So it's just not, you're just guessing. You don't really have any clue. So I know I got sidetracked there, but it really will depend on the fundamental development, because if gold hits 1,700 and then the Fed, they cut rates a couple more times, but then they're able to not cut rates for like 6 or 9 months, and gold just had this great huge move, and we see global yields maybe start to bounce, then yeah, it could be a significant pullback, and it could come back to the low 1,400. So I'm not sure. Nobody else is. It really, it'll depend on the fundamental developments. But I will say this, Corey, technically, I mean, if we don't have much of a pullback here and gold runs up to 1,700, like I'm going to be a little scared because the stocks, I know we're going to get into that, they will be as overbought as they were at the beginning or at the summer of 2016. So that could be a little scary if we keep going here and get up to that 1,700 level, or even in the 1,600s. The stocks are going to be extremely overbought.
Okay, now before we get into a little bit more commentary on the stocks, you just said something that I think is really the most relevant for investors, precious metals investors, to note, and that is what the Fed is doing. The Fed has cut rates. They look like they're going to be cutting rates at least a few more times, or at least that's what the market's pricing in. And really, the last time we saw a bull market was when the Fed was cutting rates. So to me, outside of all this other noise of trade talks and Brexit fears and headlines and economic data, that continues to be, at least in my eyes, the main driver for this gold breakout, the actual cutting of rates in the U.S., because the gold price in the U.S. was lagging all gold prices in foreign currencies. You want to just quickly share your thoughts? I know that, well, I'm pretty sure you agree with that.
Yeah, absolutely. I mean, gold is driven by real interest rates. Specifically, I mean, the bullish catalyst is falling real interest rates. And negative real interest rates. And if you look what's going on overseas, you have negative yields. So interest rates overseas have been plunging faster than inflation. So real interest rates have been plunging overseas. And that's why gold is at an all-time high against foreign currencies. And I mean, we've talked about it here over the last year and a half, Corey, how, look, there's basically two catalysts for gold. You can either have an acceleration in inflation and inflation expectations, or you can have the Fed cutting rates. Like, those are the big two catalysts that spring big moves in gold. And, we thought this time around it was going to be Fed rate cuts. And that has been the case. So, I mean, you're definitely right about that. And it depends on, as we look into next year, if the S&P really starts to roll over and we get closer to a recession, maybe we're in a recession, the Fed will have to cut rates down to zero again, basically. So that's coming. And if we're going to continue to see rate cuts in 2020, then gold is probably going to 2,000 on this move. Maybe it could hit 2,000 by the end of next year, but we're just looking ahead. But, and one key with all that, Corey, is the gold to S&P 500 ratio, which is testing that multi-year, 2, 3, 4-year resistance right around 0.54. That's something to watch, because if gold can surpass that resistance and then it confirms that breakout and holds above it for a few weeks or a few months, I mean, that's going to be really significant. That's going to tell us that capital is now moving out of the stock market and into gold, and in that scenario, that's when you get the recession and the bear market and the Fed having to cut rates to zero. That's how you get gold to $2,000 an ounce. But again, that's a scenario for next year that we have to think about. It for here and now. The key upside level is 1,700, and on the downside, you have strong support at 1,420, 1,425. Gold's looking a little overbought to me, so it'll be interesting. What happens over the next couple weeks. Again, I'd love to see it maybe just correct and pull back here for a month, reset things, and then maybe it can gear up for a move into year end. But we're just, who knows? Maybe it keeps going higher to 1,700.
Hey, this market has just continued to push through these resistance levels, so new bull market especially can stay overbought for a while, and I think that's even what we have seen. Let's talk about some of the stocks, but first and foremost, I want you to compare the moves we've seen in gold stocks compared to silver stocks. It seems like the gold stocks, the bigger producers, the royalty companies, a bit more of the, let's call them safer gold stock plays, have been moving quite nicely, while a lot of the explorers, except for just a few standout stories, they've been lagging But when it comes to silver, yes, there are less silver stocks than gold stocks, but it does seem like some of these more marginal or weaker, more risky, let's call them, silver stocks have been, for the most part, outperforming, and maybe they're foretelling a higher move in silver, but fact of the matter is it's been a bit of a different market when it comes to gold stocks and silver stocks as to which ones are moving. You have any thoughts on this?
Well, the tricky thing with silver stocks is there are just not that many of them because of the forever bear market, as I like to call it. That forced a lot of legit silver companies to basically become gold companies. So there's so few silver companies around. On the topic of silver, Corey, we're coming to the end of the month. I will say that the silver monthly candle chart is absolutely beautiful. Like, I absolutely love the long-term monthly chart of silver. So yes, I'm very bullish on silver. Silver stocks, Corey, I mean, I'm getting questions about that every week. And there's just not that many out there. And it's really, it's really difficult when you see silver stocks that have already made a big move. To get in here and now. But the one thing with silver, I mean, there are a handful of really low grade plays out there where they're just not going anywhere because their deposits are such low grade. I mean, things that are under 100 grams per ton silver or silver equivalent. I mean, that's just too low grade. And I think Sprott has put his money into a few of those, but these are just really deep out of the money optionality plays, and those projects will never get built because they're just too low grade. So I'm not really interested in investing in those. It's difficult. You want to. I mean, I'm looking for silver exploration because if those types of companies make a silver discovery, you can see a lot of money flow into those names. But again, there's really just not a whole lot of great silver plays out there. It's really scattered, and for big money that wants to be more conservative, just buy silver, just accumulate silver every month. I mean, that's the easiest thing to do. Now, for speculators like me and other people out there like yourself, it's a little more difficult. We kind of have to look in many places. People who participate in private placements, if you do that, I would be really aggressive about trying to find out what are the silver juniors that are going to go public? Because that's going to happen, Corey. That probably in the next 6 months, there's going to be not numerous, but at least a handful of new silver juniors that come out and go public. So that's something to keep an eye on. But it's really a different time, Corey. It's not like it was in the mid 2000s or 2008, 2009, when you could easily point to, well, there's these handful of juniors and you can just buy this one, buy this one, buy this one. It's really different now, and especially after the moves that some of these have had, because it's really difficult to buy into something after it's already doubled or tripled in a span of months.
Yeah, that's true. Even if there still could be a lot of upside, you do have that almost missing out feeling, and then people start looking to other stocks as well. Let's also quickly focus on the gold stocks, because you said that there is a scenario potentially that the gold stocks run kind of like they did in 2016 and then have to take some time to consolidate or even naturally correct from some of these moves. I don't think we're by any means there yet because of the selective nature of the runs in certain gold stocks. But what do you think about the setup of gold stocks then? Seeing a bit more opportunity there, would you say?
I honestly, I'm not. I feel like, there are potential opportunities in a few names here and there, but I'm looking really hard to find new opportunities right now. But again, there's only a few that I see. I mean, that doesn't mean that we can't go higher, Corey, but I'm just looking at, now, you made a great point, early in a bull market, things get really overbought. They stay overbought. That's true. However, looking at the miners, if we get another leg up here, then we have to be careful, because the overbought things that I look at, like how far the stocks are above long-term moving averages, how long have they been at new 52-week highs, so we're looking beyond breadth. We're looking at, okay, how long have they been overbought for, things like that. if we make another move higher, those indicators are going to be basically where they were in the summer of 2016. Now, it doesn't mean we're going to repeat the exact same correction, but again, if we have another leg higher, that could set up a correction and consolidation that's going to last several months, not just like a week or two or a couple weeks. So that's what I'm a little worried about if we were to make that next leg higher. I don't believe this is a time to hedge or do any of that. Because I was talking about a correction last week, Corey, and it would have been a bad move if I hedged or sold things. But I will say this: if we don't get a correction and we go up to 1,700 gold and we get another leg higher in the minors, that will be time to start trimming positions, in my opinion. Not big selling, but just maybe selling a third or a half of names that get really, really overbought. But other than that, I see no reason to sell. It's just hold, and right now you got to look really, really hard for buying opportunities because I don't see that many.
All right, Jordan, we're going to wrap it up there. Always good chatting with you and looking at the charts, but then also looking at some of the more fundamental drivers behind this bull market move. And that's really where we're at. You need to play this market like it is a bull market. But remember, no bull markets go straight up. Now, I know gold kind of has gone straight up over the last 15 weeks. However, there is a pullback that will eventually come, and that will be a buying opportunity. Jordan, good chatting with you. Thanks for taking time on this weekend show. Everyone go visit Jordan's site, thedailygold.com. Always happy to look over any stocks or any sector-specific things that you want us to. Jordan, thanks for your time. Have a good rest of your weekend.
To find out more about today's guests, visit us on the web at www.kereport.com. You're listening to the Corlin Economics Report. We'll be back in a moment.